What's going on, guys? So, disastrous day pretty much across the board here, especially in the stocks that I like to trade, which is the NASDAQ 100. So, what we are looking at here is the Triple Q's ETF. What I do want to quickly point out is that, if you are holding any longs or you're a longer term investor or a longer term swing trader, you are feeling significant pain. One thing that I do kind of want to point out to you in how, if you are a newer investor, how to really manage your positions correctly. Okay. So it's like, what you've been told and taught is to kind of, continue to buy the dip, continue to load money. Over the course of time, over the past 100 years, the stock market has always continued to rally. 100% true that the stock market over the past 100 years has gone up. So realistically, if you were to buy anything, in 1950 that is still relevant and in business, the stock would have obviously went up. Okay, but with that being said, there's a confusion and there's a thin line here. A lot of newer investors, especially if you're more in that millennial demographic, you guys are more fixated on the quicker gains and the quicker income. So if you are not okay, like 100% okay with the stocks that you currently own and the average price that you currently have, because you do believe in the company for the next 5, 10, 15, 20 years, and you're realistically looking to set yourself up for retirement, then go ahead and look away. There should be no reason why you're constantly monitoring the charts each and every single day, tick by tick, hour by hour, day by day, week by week, right? Kind of just set it and forget it. Just continue to plug money into your favorite ETF or your favorite stock and worry about it later in 20 years. Now, here's where the line gets split down the middle. If you are a newer investor, let's say you've come into the market and recently started investing, I'm going to say within the last 3 to 5 years, okay? You were very spoiled with 2019, 2020, into that 2020, into that 2021, where depending on the type of stocks that you were investing in, if you were a small cap investor, you got absolutely destroyed all of last year as well as this year. But if you were a NASDAQ 100 trader, meaning that you were investing in stocks like Apple or Tesla or Nvidia or something like that, those made their run. So you had to for sure, take profits along the way. But here's where it gets a little bit hairy, right? So think about it like this, and I'm just going to leave you guys with this one tip. We are starting an official leg down. Now, does that mean next week we're going to come back down here and test these recent lows of around 317? Doesn't have to. We can start to bounce here. We can put in a little bit of an inside bar day, and then we could start to trade sideways. If that happens, what we're going to need to see is a break to the top side here, or we're going to need to see a break to the bottom, which would really be testing the recent lows of around 318, 317. But I'm talking for swing traders and, investors, but more so in the shorter term. Like, so if you're looking to invest for maybe the next 1 to 2 years in a stock, here's the rule of thumb. You never buy long, looking to hold underneath the 50-day moving average. Okay. Underneath the 50-day moving average, underneath the 200-day moving average, you kind of stay away from. Sellers do have control and the bears do have control. So today we were pretty much about 19% down on the overall Triple Q's ETF from peak to trough. So what that kind of means is that if you're holding long positions down here, and this does continue to trade sideways, come to the bottom of the range, bounce back up to the middle of the range, trade sideways, come down, bounce back up to the middle of the range, come back to the top of the range, come back down, and we realistically trade sideways in this big range where stocks are, have their peaks and valleys, but realistically, the share price is kind of just staying the same. If that's the kind of equation that's going to be happening here, rolling out for the rest of the year, heading into next year, one thing that you really need to take note of is that when we're over the 50-day moving average, which is this red line on my screen here, we're going to buy long and we're going to swing it. Okay, we'll swing it to the next major area of supply, which is a 200. If we do get rejected, we go ahead and sell that position, lock in those gains, and you can immediately flip to the short side. Or if you still would like to hold and you're not looking to short-term swing trade, what you would do is at every major resistance is hedge your long positions with some Qs short, with the SPY ETF short. So what does that exactly mean? That means that, let's say, for example, you're holding Apple and Nvidia, and we have this huge run up like we did, as we start coming into some of these upper areas of supply here, you would take a few put contracts and hedge your position short, meaning you're going to hold on to your shares, but you're just going to kind of protect your capital in case the market does decide to slide. Maybe go ahead and grab some puts for, 2 to 3 months down the road and let those kind of pay off. Now, if we do break above this supply, then you would just close those put positions and continue to ride your shares. So when is it really a good time to start loading up for investors? Is it now? Was it 3 weeks ago? Do we need more time? The simple answer here is that I very well think that we can be in a range from 370 down to 315 for the rest of the year. What does that mean? As we approach the bottom of this range here, I think that there will be some buyers that start to step in down here off these recent lows, could put in a little bit of a triple bottom here, and we could get some sort of bounce. Here's the best way to kind of play that. The best way to kind of play that is when we get down into this area, which we still look like we have a couple more days left of selling. If we get down into this area, you can take your shot at going long or trying to swing something. Now, here's where you're going to really need to be doing your due diligence and managing that position correctly. If we get down here to 318, 317 and we bounce, and then we start to trade sideways and we lose 318, you need to sell your position on the stocks that you bought down here, because if and when we do decide to put in new lows below 318, you definitely do not want to get stuck holding the bag for another 6 months on a stock that might drop to 300, it bounce to 318 and then stay under that level. That's how you play it to the long side. If you're looking to play this to the short side and short more stocks or buy put options, what you're realistically looking for now is a new short setup. So 3 very extended days worth of selling. I do think that we have maybe 1 or 2 days worth of consolidation, and then maybe we do drift down here slowly over the course of another week or so. But when we get here, we do need a bounce. So we need some sort of bounce here, whether it be a dead cat or not. And the bounce needs to come, it could be back to 325, back to 340, back to 345, and then it needs to start stalling. When it starts to stall, you can do one of 2 things. Wait for it to break the lows and take your short position, or short it here at the 50-day moving average if we do not reclaim it. Because as you can see here, 8 days trading sideways below the 50-day moving average was a serious level of rejection. So when we get back up here, you can take your opportunity to try to short that position for the move to come back down on the dead cat bounce. But if we do reclaim the 50-day moving average, you do have to exit that position. I hope this helps a little bit, guys. If you guys want to trade with me, or you guys want to learn how to day trade options or stocks the first 1 to 2 hours of the day, I have a fantastic free strategy that anyone can use. Doesn't matter if you're a beginner or you've been trading for 20 years. You guys can use this to start being a more profitable and consistent trader the first 1 to 2 hours of the morning. That link is down in the description box. It's the first one. If you're looking to join the community and join the Discord, definitely join. That link is also in the description box below. Make sure to subscribe to the YouTube channel, and I'll see you guys all on the next one.